What's going on, guys? Welcome back to the channel here, and yeah, I'm gonna do a quick review of my top picks I'm looking to get into going into the month of April here. As always, if you're new to the channel, be sure to like and subscribe for up-to-date content. I'm gonna try and do one of these every month there to try and give you the best intel and my insight of what I'm buying. So as we can see, the stock market's taking a huge tumble off this COVID-19 stuff. Like, you're just seeing things plummet day to day. Most of my recommendations, just FYI, that I'm gonna be giving out here, I do see the market having a further downtrend, another drop. So I would recommend waiting for a further drop, and a lot of companies approaching closer to their lows they had a few weeks ago before buying. But anyways, with that aside, let's jump into stock one. So the first stock I'm actually going to be looking at is called Plug. It's traded under the NASDAQ as PLUG, or Plug. And Plug's market cap is 1.03 billion. So the company itself focuses on hydrogen fusion cells. You're going to see that prevalent in a lot of electric vehicles, more so ones in manufacturing industries like forklifts, as well as a lot of stationary power. You'll see them, they're in North America and Asia right now. It's a greener approach and uses a kind of a rechargeable battery aspect for that.
So diving a bit deeper into Plug, we can definitely see they have well diversified in the renewable energy market. The company offers GenDrive, which is a hydrogen-fueled PEM fuel system that provides power to electric vehicle cars. They also have Gen Fuel, which would be the equivalent for larger buildings and infrastructure. And to top it all off, they actually have a maintenance program called GenCare, so they can do all the maintenance on their batteries and build good customer relationships with them. With environmental sustainability being a bigger factor in today's day and age, you can definitely see this company growing and expanding. You are starting to see a lot more car companies push towards battery-operated vehicles, so this will definitely benefit them with that aspect. As well, large companies like Amazon and Google in their warehouses are starting to use this cell fuel technology, and it's just allowing them to have a faster recharge rate, while giving them an option for renewable energy and not polluting the interior of their warehouses. You couldn't really use gas-powered vehicles too much. It would create a smog inside their warehouses. And just looking at the company's stock price, you can definitely see it's had a huge rally in the past year, going all the way up, surpassing $6. COVID definitely did start tanking it going down. But looking at current values, if it was to approach closer to the $3 range, I'd say, and even below, getting closer to mid twos, I would definitely count this as a buy option. You might have to hold it for short term, but hopefully out of this COVID virus, we start to see the environmental impact we have as a civilization. We're seeing places like Venice, the canals clearing up and dolphins swimming closer to shore in Spain. And I really hope this opens the eyes of a lot of people to see that renewable energy does have positive impact, and the pollution that we're giving off in this world is negatively impacting us.
So the second stock I'm looking to pick up is Visa. Visa's traded under the NASDAQ under ticker symbol V, and they currently have a market cap of 336.48 billion.
Diving deeper into Visa, they do operate as a payments technology company. They're worldwide, and pretty much everyone knows about them. The reason I see so much value in Visa is when the economy is doing bad and we're in these kind of recession-based areas, that still has value. People are still going to have to make transactions, people are still going to have debt, and people are going to need to use a line of credit in some aspects. If they aren't having money coming in and the government has yet to support them, they will have to take out loans and everything else. Even with the economy being in a depression state at this point, people are still going to make payments. Their payments may switch to more necessities, but when you start thinking about it, either way, you're going to be using your debit and credit card to make a lot of these payments, especially with the sanitary policies of COVID. Looking at the charts, I definitely wait for a little drop. I do see it to be a little overinflated with just how job numbers are and everything. But Visa is kind of key in both recessions and booming markets. People need to do payments either way. And it's not a company that's going to disappear. It's super large. Their market cap's one of the largest around. So yeah.
So the next stock I'm looking at picking up is Enbridge. Enbridge trades under the Toronto Stock Exchange under ENB, and their market cap currently is 80.19 billion.
So Enbridge is an energy company in easiest terms. They operate infrastructure in both Canada and the United States, so focusing all over North America. The company focuses in many different aspects, including gas transmission, liquid pipelines, gas distribution, green power, and many other energy services. It has begun getting into more environmental sustainability options, such as wind, solar, geothermal, and waste heat recovery facilities. So this is definitely key, as I said, with one of the previous companies, with renewable energy and the whole push towards environmental sustainability. Now, diving into the stock market chart, I definitely like the looks of this. It is showing small signs of recovery. It did have highs just over 43 in February and started to decline due to this COVID virus. But when you start thinking about it, everyone's still going to need power. Utility companies are key. They're good in a booming industry and recession. People need power, whether they like it or not. So this is a payment that can't be deferred. You're still going to have to pay your power bill, whether you have an income or not. Government may try to subsidize it, but either way, they're still going to be having a good income off this. The only short-term issues they've had probably is the big sell-off of oil and natural gas, but I do see that rebounding once transportation and globalization starts to kick in again.
And the final stock I'm looking to pick up is Nvidia. Nvidia is traded under the NASDAQ as NVDA, and they currently have a market cap of 149.27 billion.
Now, taking a closer look at Nvidia, Nvidia has always been one of my top favorite companies and one I've invested in numerous times over the years. They focus in both GPUs and AI technology. You can see them prominent in items like self-driving cars, PC gaming, mainstream PCs, and a lot of cloud-based technology. The thing I like so much about them now in the short term is they're going to do well whether the market goes up or down. If the market continues to decline, you're going to see the gaming community increase and their GPUs are going to go off the shelves. As well, they've created a system to try and help with the COVID cure, where you can actually use your GPU's power to help. It's kind of similar to Bitcoin mining, but it will compute algorithms to help try and solve issues in regards to fixing the virus. And of course, if the market recovers, they are one of the largest graphics cards producers in the world, and they're releasing a new line of graphic cards this year. I've always used Nvidia personally in my PCs, and I do see them having value and continue to grow past their old-time high once this all blows over. Just taking a quick peek at the chart, I do see that recovery being a little heavily overextended. I would wait for a bit further of a drop. But overall, definitely a good company to get into for both short-term and long-term trading. I see value in both directions, as I said, and it's definitely going to be a beast, going into 2021, I'd say.
And looking to throw in a bonus stock. Here, I'm actually going to be looking at the triple leverage ETF of Gush. Gush follows oil prices to a triple leverage degree. And with the huge sell-off they've had and the interactions of Saudi Arabia and the oil price war they've been having, you've definitely seen oil around in your neighborhood drop. And I'm going to be waiting till it's about closer to about $10 a barrel. But I definitely see value once this whole virus is over, if people need to drive and everything else again, and prices slowly resuming to normal. I wouldn't touch at this very moment, wait for it to drop a bit more, because I do know the reserves are heavy and transportation's just a lot slower nowadays with nothing to do. But I definitely wait. Once we start to see globalization and transportation of goods start to pick up again, I definitely keep my eye on this one. It is triple leveraged. It's super high risky, but if you play your cards right, there could be big money, going into 2020, 2021. Really, whenever this ends. I mean, I hope tomorrow. As always, thanks for watching. Hope you guys learned something new, or hope you guys, got some intel on some new stocks you're looking to invest in. Be sure to like and subscribe if you're new to the channel. And stay sendy. Let's make some money this year. All right, take it easy, guys.